Imagine you're holding a crisp $100 bill right now. Fast forward 20 years, what do you think it'll buy? A fancy dinner for two, or maybe just a couple of coffees. Inflation is silently stealing your money's power every single day. But what if I told you there's a way to fight back and actually grow that cash into something massive? Stick around, because today we're diving into why investing in the stock market could change your financial future forever. Welcome back, folks. Let's start with the basics. Why should you even bother investing? Think about it like this. If you just stuff your money under the mattress or leave it in a basic savings account, inflation is going to eat it alive. Over time, prices go up for everything: groceries, gas, rent, you name it. Back in the day, a candy bar might have cost a nickel. Now it's $1 or more. That's inflation at work. I remember when I first realized this, and it hit me hard. If you don't invest, your money's buying power shrinks. But if you put your money to work in the market, compounding kicks in. That's like magic here. Money earns money. And then that earned money earns even more money. Picture this example. Say you stash away $10,000 without investing it. In 20 years, thanks to inflation at around 3% a year, it might only buy what $5,500 buys today. Ouch. Now, invest that same amount in the stock market, assuming a modest 7% average return after inflation. In 20 years, it could grow to over $38,000 in today's dollars. That's the difference: your money working for you instead of wasting away. It's not about getting rich quick. It's about building real, sustainable wealth over time. So, how does the stock market actually work? It's much simpler than you might think. When you buy a stock, you're basically becoming a part owner of a company. Yeah, that's right. If Apple or Amazon is doing great, and you own a tiny piece of it, you benefit as the company grows. The company's value goes up, and so does the price of your shares. Profits can come from the stock price rising or even from dividends. Those are like little cash bonuses some companies pay out to their shareholders. It's all about supply and demand. More people want in on a hot company, the price shoots up. But remember, markets can dip too, and that's completely normal. The key is patience. I learned this the hard way early on. Don't panic when things fluctuate. Now, the big question: what should you invest in? There are a few solid options, especially if you're looking at something like the Pakistan Stock Exchange, or PSX, which has some great opportunities. First up, we have mutual funds. These are awesome for beginners. Professionals handle everything. They pick the stocks, manage the portfolio, and you just invest your money. There's a small yearly fee, usually around 1 to 2%, but it's often worth it for the expertise. It's like having a team working for you around the clock. Next, there are ETFs, which stands for Exchange Traded Funds. These are similar to mutual funds, but they trade like individual stocks on the exchange. You'll need a brokerage account to buy them, and the fees are often lower, sometimes under 0.5%. They are a basket of stocks, so you get diversification without having to pick individual companies. Think of it as buying a slice of the whole market. And then there's individual stocks. This is where you pick specific companies to invest in. But if you're new to this, I'd say start with index investing. On the PSX, you could look at something like the KMI 30 or KSE 100 indexes. They track the top companies and give you broad exposure to the market. A word of advice: avoid jumping in based on hot tips or rumors. That's a recipe for trouble. Always do your homework instead. Timing and amount: when should you start, and how much should you invest? Here's the deal: don't invest until you've got your basics covered. First, pay off any high-interest debt, like credit cards charging 20% or more. That's just throwing money away. Then, build an emergency fund enough to cover 3 to 6 months of your living expenses. Life happens, and you don't want to be forced to sell your stocks in a panic if your car breaks down. Once that's all set, invest money you won't need for at least 3 years. The market is a long-term game. In the short term, it can be pretty bumpy. Start small if you're nervous. I kicked off with just about 8,000 Pakistani rupees. That's like $30 back then. It wasn't much, but it got me in the door. Consistency is the real key here. Add a little each month, and just watch it grow over time. Let me walk you through a quick demo of buying a stock. Imagine you're on your phone with a brokerage app open. First, you log in. Then, you search for the stock, or ETF you want, say, something from the KSE 100. You check the current price, and decide how many shares you want to buy. You hit buy, confirm the transaction, and boom, you're an investor. It really is that straightforward. You don't need fancy suits or a Wall Street office. Anyone can do it right from their couch. I've been a retail investor for 8 years now, and let me share some hard-earned lessons. The stock market is not a get-rich-quick scheme. It's for building wealth patiently. I once chased a sure thing and lost big. That experience taught me to focus on the long haul. Always understand the company you're investing in. What is their business? How do they make money? That knowledge kills fear and builds real confidence. And be sure to watch out for economic cycles. Booms and busts happen, especially in places like the USA, where things can swing pretty wild. Keep learning about things like interest rates, inflation, and global events. They all impact the market. Don't put all your eggs in one basket. Diversify your portfolio. Mix in some gold for stability or money market funds for safer returns. And finally, embrace personal agency. That means when you hit a new term you don't understand, Google it. Research it yourself. It empowers you to make smarter, more informed choices with your money. Wrapping this all up, investing isn't scary once you get the basics down. Start small, stay informed, and let time do the heavy lifting for you. If this sparked something for you, drop a comment below and let me know. What's your first investment goal? Or share this with a friend who's been putting it off. Let's build that wealth together. Thanks for watching, and I'll see you in the next one.